Hi, and welcome to the Stock Scores Market Minutes for March 6, 2017. This week's topic, uptrends need a foundation, plus my regular weekly market analysis, and then the trade of the week on Weight Watchers. So, stock trending higher out of boring, often sideways price action. As prices go up, investors find more motivation to sell and take profits. And that means the farther away price is from those foundations, the more likely there will be a pullback. What we want to see is those stocks that are just breaking out of these boring sideways ranges, because those are strong foundations, and the closer we are to those, there's less likely a chance that there will be profit taking. The farther stocks go up, the less of a foundation they have, and the more dramatically they can pull back. And we'll get into an example of that when we do our trade of the week. All right, here is the S&P 500 for the last month. You can see that we are in an upward trend. And we hit the top of the channel right there. Didn't draw that line very well, as I often don't. And we've now pulled back to the bottom of the channel. We should bounce and continue higher, but what you want to watch for is there a break of that upward trend line? If so, if that happens next week, then we're going to see some more profit taking. Wouldn't be unreasonable, because looking at the weekly chart going back 3 years, we are a long ways away above the upward trend line, and we are at the top of the weekly channel. So the likely outcome is at least sideways trading for a little while, or maybe a slight tick up, but it wouldn't be unreasonable to have the market come all the way back to the bottom of that channel where it will find support. Now looking at the Russell 2000, which has really lagged the large caps, and of course the large caps benefiting from speculation that Trump presidency will institute some new tax motivations for these large cap companies. Small caps have been kind of ignored. Yes, they've done well, but they haven't done as well as the large cap stocks. And you can see there we broke out of that flag 3 weeks ago, but we just can't seem to gather any upward momentum. And that really shows in the trading action. There's not a lot of low price stocks making moves. Most of the action is in stocks like Apple, Goldman Sachs, Boeing. These are the stocks leading the market right now, while the small caps lag. Looking at the Canadian market, we had a little bit of a breakdown this week. You can see we've pulled back fairly substantially on this 30-minute chart. However, looking at the big picture, we haven't broken the upward trend line. I can draw a line across those bottoms. You can see that we were at the top of the channel. We've pulled back to the bottom, where so far we are holding support. Again, just as we talked about with the S&P, if this market breaks to the downside through that channel, then we're probably headed to this inflection point of support. So remains a bullish long-term trend, but I do think a little bit of caution is warranted. On the TSX Venture, we've rallied up to the price peak there, and no surprise, we've got stuck there. Probably going to grind our way sideways for a little while. A lot will depend on gold. This market heavily correlated to the price of gold and what gold stocks are doing, because that's a big part of the TSX Venture. However, until we break through this support zone here, I wouldn't be too worried, and I'd be optimistic if we can break to the upside through that level. Now, although this market looks a little sleepy right now, there are pockets of strength in this market. The mining sector may be slow, but there could be strength in other areas, some of the technology areas, some of the marijuana stocks still doing well. Now, this week on the 20-year Treasury, I actually show here a monthly chart going back all the way to 2003, because this is quite interesting. We've had treasuries and the bond market pull back quite dramatically in the last few months. And what it's done is it's come right back to this long-term upward trend line where it is holding. Now, this all started back when interest rates started to drop following the financial crisis. So here was the financial crisis in here, and then we had a real drop in rates to try and stimulate the economy after the financial crisis. And we've been in a upward trend for the last number of years. And yes, we've had many gyrations along the way. The question now is, do we break through this floor, or do we go back into higher bond prices, which mean lower interest rates? It's really a critical time. May not happen tomorrow, but in the next few months, we're going to get some kind of an answer. Does the market break up on a monthly chart to the upside and try to get back up to those top of the channel, or are we finally going to break this upward trend that has been intact since 2011? On the US dollar, this is an important part of what happens with treasuries, because if interest rates in the US rise, that's probably going to help the US dollar go higher. And you can see it's got a little flag pattern here, and it's starting to move upward, not with a lot of motivation, but it is starting to move upward. We are in an upward trend in the short term, and this is one to watch. If we can continue higher, breaking through this resistance, eventually this may be a strong run in the US dollar, which is difficult for the US economy. And Trump really has said that he doesn't want to see the US dollar strong, but we'll see how that goes. It always hurts exports when your currency is strong. On the gold market, we've had a great little rally here over the last 3 months, right there. I've said over the last 3 months, look, it's a nice little short-term bull market in a bear market trend, and we are now getting close to the downward trend line. Now, does it have another week of upside in it? It could, but I'm worried that we may be seeing it rolling over here and moving lower, especially as talk of a Fed interest rate raise in March is picking up momentum, and probably quite likely that, of course, bad for gold, makes the US dollar go up, makes it really means that that stimulative policy that the US Federal Reserve has had for a very long time is starting to go away, and that will be bad for gold. So I want you to be very cautious with gold. Watch for a break of this upward trend line on the weekly chart. Oil, absolutely boring, stuck in a very, very narrow, tight trading range. That stability is, I suppose, good in some ways, but it doesn't make this sector very much fun to trade. And the fear market, this is a very short-term 30-day, 60-minute chart, and you can see that we get little blips higher. We had that a couple weeks ago, and now we're moving down through support, probably going to move lower. This can change in any moment. Keep an eye on this market. I like to look at this 30-minute or 60-minute chart. Watch for a break of this trend line, which is intact right now. If we break to the upside through that trend line, maybe it lights it up again, but for now, there's not much fear in the market. So my ratings then, bullish on the US market, both short and long term. Long term, Canadian bullish, short term neutral because of that breakdown. I've lowered my ratings to neutral on gold on both time frames, and I want you to be cautious looking for a break of that upward trend, the short-term upward trend. Oil, neutral on both time frames. It's just stuck in a narrow range. U.S. stocks remain strong, but with a Fed rate hike likely in March, buyers seem to be lacking motivation. The Canadian markets broke down this week in the short term, but remain in a bullish trend longer term. Now, gold is stalling as it nears resistance at that downward trend line and may soon roll over. Oil, boring, fear, low. All right, let's look at the trade of the week. If you've been following my videos for some time, you'll know that I have a little indicator called an action candle. It's the pink dot on the chart. So right there, you can see an action candle, another one here, and another one there. Now, there's two things I want to highlight. First of all, an action candle occurs when there's statistically significant abnormal price and abnormal volume behavior. And that happened there. And that really is what started the trend higher on Weight Watchers. This was on, I think, Monday. What's this? Friday, Thursday, Wednesday, Tuesday, Monday. Yes, Monday we had that little spike in volume, spike in price action, indicating the market was getting excited about something. Now, look, prior to that, we had nice, boring, low volatility trading. And then we broke out of that and started our move. And then into the big jump on Wednesday, we had boring, quiet trading. And that's what allows the market to move up without a lot of profit taking. You want to be a buyer when you get these breaks from low volatility. To be a buyer up in here, you're chasing the market as it runs away from the trend, and it ultimately is going to pull back to the trend line, which is what Weight Watchers did through the rest of the week. All right, well, that has been the Stock Scores Market Minutes. Please like the video, subscribe to the channel, and as always, trade well. See you next week.